Hey guys, welcome back to another live stream. I'm excited to be here tonight. I tell you what, it has been a long day. I'm a retired guy and I'm not supposed to have to work like this, but it's hot and, I've been working and sweating, and that's what it's like living on a farm. So we'll go through some stocks tonight. We're going to have some fun with that. We're going to talk about the earnings reports that are coming up this week. I think there's some interesting ones, but it's really about the kickoff of the season. So that's going to be a big deal. We're going to have. I'd like to talk a little bit about why I sold out of IBM, and that was a big deal. I've held it for quite a long time. And then there's a couple of questions for Kevin that came in. And then ultimately, I want to hear what you guys are talking about. So let's do this first. Let's talk about the earnings reports that are coming this week. I'm going to flip over to. I was planning on doing something else first, so I'm going to stop that, and I'm going to flip over to this. Yeah, there you go. Whoops, that's the wrong one. That's just one of the portfolios. But if I go over here to tools and go to the earnings calendar, this is Tip Ranks. It's actually one of the tools that I use quite a bit. It gives me a sense for what analysts are thinking. It's also where I keep my portfolio. It actually has a real-time update feature, and it gives me the ability to have multiple portfolios in there. And you say, well, what's the big deal with that? Every app does that, but not every app consolidates the portfolios. So I've got several investment accounts. And so like in Seeking Alpha, I keep my portfolio in there as well. But I can only look at, I can look at all the investments in total, but it will have an occurrence for every time. If I've got a stock held in 2 or 3 different accounts, it'll show me all 2 or 3 of those, but it won't tell me what it is overall for that particular stock. So that's why I like Tip Ranks for that. But it also gives some good economic as well as earnings data. So that's what we're going to take a look at here. We're going to kind of focus this down on just the mega and the large caps. And we're going to start here on Monday, which is today. We're going to see that Goldman Sachs reported earnings. They reported $8.62. There was a forecast of $8.31. So that is good news. And then if you look at BlackRock here, they reported $10.36, and the consensus was $9.96. So that was actually a pretty good beat on both of those. So, hey, it's a good way to kick off earnings season. Do we think every company is going to beat earnings? I don't know. There's some companies that are going to be interesting to watch, and it's not really these two, but it's a good start to earnings season. Let's take a look and see what's happening tomorrow. Bank of America is reporting tomorrow. One that I'm personally interested in is United Health. I have some shares of United Health, and I'm looking forward to seeing what they have to say. You can see that it is a smart score of 10 and a strong buy. So I think, I'm interested to see what they have to say, especially because it's one that I hold. So we got Morgan Stanley, Charles Schwab, PNC, State Street, and that looks like all the interesting ones anyway. It's already sorted by market cap. So, when you get down to the 18 billion, it's just not worth talking about. All right. So let's move on then to Wednesday. What's coming up Wednesday? One of my favorite, or one of the ones I'm most looking forward to, is Johnson & Johnson. I'm hoping to see that there is some progress on the talc settlement. And so, hopefully that will shine through. We have ASML. If you're not holding them, that is a company that produces the equipment to create these the chips that go into the computers. I'm blanking right now. You got a United Airlines, Kinder Morgan, Crown Castle. Another one I'm interested in is U.S. Bank Corp. They are going to be presenting their earnings also on Wednesday. Looking forward to see what they have to say and what their forecasts are related to their net interest income and margin. So that's going to be good to see. Elevance Health also. I'm interested in them, but they've gone up so much recently that I'm sitting on the sidelines for them. I don't see anything else here that is something that I'm interested in. But so on Thursday, what happens Thursday? We have Netflix and Taiwan Semiconductor. So whereas ASML makes the equipment to make the chips, Taiwan Semiconductor actually makes the chips. So they buy the product from ASML. You probably all know that. Nokia, Abbott Labs. I don't see anything. Novartis, for those of you who are interested in those kinds of things. But I don't see anything else. Oh, Snap-on. That's one of my buddy Ryan Williams' favorites is Snap-on. So that's reporting on Wednesday. I'm sorry, that's reporting on Thursday. And then on Friday, it slows down a bit. We have American Express, Schlumberger, and Halliburton. And some of you I know are fans of Huntington Bank. They report out on Friday also. So, it's going to be an interesting week, although the really big weeks are coming up. So this is kind of getting us warmed up, kind of getting us ready for all of the fun stuff we're going to find out during the earnings season. So those are the big earnings reports. And let's kind of see who's on the program tonight. Let me get rid of this thing and do that. All right, let's go. Let's see who all is here. So we've got Pat is in the house. Good to see you, my friend. Rust Moments. Now, Rust Moments came on last week, and I think it was last week, he had bought a call, not sold a covered call, but bought a call for a particular stock. And I don't remember which one it was even. But anyway, he chickened out and actually sold the call. So he made a few dollars on it, but I was really hoping to see how that thing was going to go for the rest of until October, which is when he had the date out there. So Fast Eddie is in the house. Hello, my friend. Greg is here. It's good to see you, buddy. And as always, X to the what, X to the who, X Dividend Dad is in the house. Slammer 6789. This is kind of the cast, the normal cast of characters here. We've got Eli here. Honeybee is here. Honeybee, we're going to be talking about your question here in a few minutes. Brad's around. Okay, so Pat has a question, and this is a good question. I'll go ahead and touch base on this before we kind of get started. So Pat is asking, what percentage of cash do you carry in your accounts? And I would say it varies. And let me back up for a second, because there is some confusion when I talk about, or when anybody talks about cash for investing. Some think of cash as their overall cash. So that would include their emergency fund. It would include any money they've saved up for, future purchases. I don't count that. I count only the cash that is in my brokerage account. So when I sell a stock, like I sold IBM, they sell those shares and that money gets deposited into a money market fund within my brokerage fund. I count that as my investing cash. It's not my emergency fund. It's not any sinking funds I have set up. It is strictly the brokerage account. So when you're asking about the percentage, I don't want to have more than 10% of cash, because I want to be, somewhat invested. I'm not trying to time the market. If I were trying to time the market, I might, jump 50% out and then 50% in. But there's going to be times I'm going to have 10% cash, and it really has to do with me selling some shares that I think are ripe for selling, and then not really having anything else to put it into at the moment. So I can go up to 10%. I think currently I am at, well, here, I'll tell you exactly where I'm at. Why? Because I track such things. I am a nerd at heart. But I've also got a slow internet connection. So there you go. We got that going for us. I would say I'm at maybe 4% right now. So I've got 4% of my portfolio in cash. And actually, I'm pulling some of that out. And I'll talk more about that on a future video. I'm going to make a different investment, so I want to kind of share what that is. But I need to get some more things wrapped up first. So if I back that out, it's probably more like 3 or 3.5%. So it's kind of where I am. Hopefully that helps, Pat. Jim Betts, man, I just love your picture here. It's really cool. So good evening to you. Yeah, this is a good question, Eli. I tried to look into that, and I just didn't see any news today regarding Next Era Energy, and it was down like 6%, 6.5%, something like that. But hey, I'm still up about 19% on it, so I can't get too bent out of shape. I just think I just think it ran up too fast, and I think they were building in too much growth related to solar and stuff like that. So I think there was just a pullback on it. But again, I can't be too sad about it because I'm still up 19%. I've only carried it for about 3 or 4 months. So, but it ran up really fast. So that's kind of what I'm thinking, Eli. But something may pop out. Maybe there's some insider information that I just don't know about. So we'll just have to see over the next few days what happens. But that's a great question. Ex-Dividend Dad says, bunch of earnings this week. For me, UNH is running up because of it. Yeah, absolutely. I'm looking forward to UNH, and that's good stuff. John Jay's in the house. Welcome, my friend. And we've got Russ, who says, Indiana Burgess, I am here. And that's great, man. I think you're at the bowling alley. So hopefully you are having a great time there. But I appreciate you jumping on, man. It's so cool. Let's see. Ex-Dividend Dad, Biden is on talking. I can't understand anything he is saying. I don't want to waste my vote. So the question is, if I write you in, will you do the job? And anything you do, Ex-Dividend Dad, I will follow through. So, yeah, I'm in. I think if you write me in, I think that'll be one vote that I get from the country. So I don't think we're in any danger of that happening. Michael Swami is here. Good to see you, buddy. Yeah. Yeah, I did say normal cast of characters, but our cast of characters are probably not normal. So I'll just say, as you suggest, usual cast of characters. That's a good catch, man. I kind of blew it on that. Sorry about that. Can you show us some info on SS or tip ranks? So that's SS is simply safe dividends, I think, or tip ranks for NXST, and your thoughts on next 6 to 8 months projections. So yeah, let me do that here in a second. I'm gonna write that down. That's Next Star, I think, and that's actually my buddy Russ's favorite stock. I think he is into NXST. So we'll take a look at that. I'm writing that down for when we get to the radar piece of this. I literally just got my power back in the Houston H-Town. I think that's Houston area. 7:03 p.m. Central. Man, that's been out for a bit of time, right? So I'm glad to hear you're okay, and it all sounds like now that you have electricity back, you probably have no groceries left because those are probably ruined by now. So hopefully you guys came out of that okay, that hurricane that came through. Yeah, Houston area, north of the city. Absolutely. Yeah, Russ is at the local bowling alley. That is so cool. Look around. I might be behind you, Russ. Jim Crocodile Kevin. I like that too. I don't do an Australian accent very well. but hey, maybe someday. Um, let's see. All right. Then tell them back down. All right. Okay. I'm gonna. I think you guys are talking to each other on there, so I think that's cool. And let's go on to IBM. I sold out of IBM. I had 225 shares left. Ended up, selling it for around 180. It has gone up the past couple of days, and the way I kind of think about that is, if I'd waited a couple of days, I could have made some more money on IBM. But let me show you what I kind of look at. I have this, and I think I'm going to do some videos on how this works. I don't know that, it's not something that is scientific, but it's kind of what gives me a sense for whether I should buy or sell. So let me share this with you. I'm going to stop sharing that, and I'm going to share this. It's exciting, I know. All right, here we go. And let me make this bigger so you can see it. So these are the stocks in my portfolio. As Russ would say, my portfolio. So these are the stocks that I have. I have 23 stocks in my portfolio. I have a column here that's based on some data in the that I pull that tells me, and I have a calculation where I calculate what I think the total annual potential return is for the next couple of 3 years. So, when I'll talk about this in some future videos. I don't want to go into that tonight because it is really nerdy. So, but anyway, so if you look at this, I've been buying Lamb Weston, right? And I believe that, per my model here, it's going to have a nice long-term return. I am a long-term investor. I am not a short-term investor. Sometimes I get in too early, and that's obviously the case here with Lamb Weston. I think I'm down, even after today's drop, I think I'm down about 4 or 5% on it. So it's not terrible. But I would have loved to have waited a little bit, but I also, it's just an undervalued stock in my opinion. So, I'm also buying U.S. Bancorp. You can see why I'm buying U.S. Bancorp. So here we go. Let me open this up. This is that's just the stocks that I own. I also have a watch list here, and you can see there's a lot more stocks on there. But look at the very bottom. The very bottom is International Business Machines. I'm expecting them to actually decline in value over the next couple of years. Doesn't mean it'll be tomorrow, but I think over the next couple of years, it's actually going to tread water or maybe even go down by a few percentage points. So I decided it was the right time to sell. So that's kind of what I look at, and kind of gives me a logical place, a logical way, a process for to figure that out. So, one of these, whoops, I picked the wrong one. I want to pick the owned. All right, there we go. Okay, so hopefully that's helpful, but that's just the way I do it. So I sold IBM because it is, I believe, gonna not do. I think it's overvalued at the moment, and significantly. So I decided it was time to sell that off. And now I got this cash. I took some of the cash. Probably I'm going to take about half of it and invest in some other things, not stock related. So I'll also share with you about that once I actually make those transactions. But I don't want to do that today. Hopefully that doesn't make you mad. Okay, so there's that, and let's see where did I leave off? So Pat is talking to Russ. Yeah, he said he missed yours, Russ, but he got it on mine. But we don't have any. There's no territorial rights here. It doesn't matter. If you can make it on Monday night, that's awesome. If you can make it on Sunday night to Russ, that's great. Friday night with Ryan, that's awesome. So just jump on any of them or all of them. We'd love to have you in any of our live streams. So let's see. John wants to know, it had a run up. Here's Russ's response. It's an acquired taste, and this is one that not many third-party services like. I'm either going to prove them wrong or learn an expensive lesson. Hey, you know what? Those are some of the best lessons, though, man. Sometimes we have to make a call. And this book by what was it called? I'll think of it here in a minute. But it wasn't the latest book I read. It's been another book prior to that. But as investors, his point was, it was Morgan Housel and somebody, The Psychology of Money. Morgan Housel, The Psychology of Money. His point was that when we swing at a stock, now, Warren Buffett would say you got to have a margin of safety and you can't lose any money. Morgan Housel will say, you know what? If you bet 500, you're doing good. So swing and, learn from your mistakes and move on. So I think that was a good book. If you haven't read that, Russ, that might be a good read for you. So Michael, who just experienced the hurricane, says regarding groceries, it's all good. Currently on a liquid diet, if you get my drift. Still darn hot. Yeah, I bet it is. I know it's hot here, my friend. I can't imagine how much warmer it is down there. I went out into my shop today. Now, my shop it was originally built for one of those RVs that you drive. It's big. So it's really wide. It's really long. And I went out there. We were starting to kind of get that organized. And immediately I had sweat just rolling down my face. I mean, it was hot. So I can't imagine what you guys are going through, Michael. Let's see. Jim says he got $73 in dividend income from USB. Maybe put it back into USB, hoping for a good earnings report. Yeah, I'm looking at USB and it has run up a lot. Let's take a look at that because I was really surprised. Let me share this screen because I was surprised how much it had run up. So I don't have any cash to invest at the moment anyway, but if I did, I would probably want to see maybe a little bit of pullback, I guess. Here, let's go to, where do we want to go? Let's go to Seeking Alpha and let's look up US Bank. US Bank has done very well. It's one that, has been on my buy list for a while. But let's say this is the year. They are up 20% on the year to date. It says they're down 2.15%. Have I got the wrong stock? No, that's US Bank Corp. Well, maybe it is down. I don't know. So 1 year is up 20%. 6 months is up 2%. 1 month is up 9.52. So here we go. Here's where the money's coming in. So the last 5 days, it's up 6%. For this last month, it's up 9.5%. So that's where the money is coming in. And so I'm excited about US Bank Corp. Looking forward to their report as well, Jim. So I got some dividends from them this week as well. So I'm excited about that. And John Jay's got some NXT, a bunch of numbers. All right, Jim says he got rid of IBM in December, January after Barron's claimed that IBM was late to the AI party. Yeah, I mean, that could be. We'll just have to see, because I think we're going to find that either this AI thing is real or it's not. So I think one of the things we're going to look for in this earnings season is what are the volumes from companies that are really focused on AI, like NVIDIA. Here's another one. If you haven't made the connection, Accenture is an AI play as well. They have a significant consulting arm, I guess, that focuses on AI. So that's also a service around AI. So that's one to keep an eye on. I think they're overvalued at the moment, but it's one to keep an eye on. So we want to see what the AI is doing and what their volumes are, what their margins are, and if that business is growing as much as we think it should be. If not, I think we may see some pullback in the AI space. I think it is priced to like, blow the doors off of it. Let's see here. So Fast Eddie says, if your IBM is overvalued, at what point would you get back into IBM stock price? Yeah, that's a great question. As you all know, I mean, so fair value, which is the value that we believe the stock is worth, is in the eye of the beholder. It's in the eye of the calculator, right? You might have somebody that says, "Hey, it's worth $200," and somebody else says it's worth 150. So there's a lot of people that will, look at PE ratios, and those are relative values, and those are good for on the fly kind of things. I don't think they're good for determining the true value of a company. I think they are good in determining how valuable it is compared to others. So it's a relative value. What I like is absolute valuations. Those are things like discounted cash flows and bottom up calculations where they take each particular segment of the business and determine what the sum of the parts is. So I like those kind of things. Morningstar tends to do the bottom up approach. They don't do the discounted cash flow very often, but it's a better, I think it's a better way of determining fair value. But at the end of the day, it's really based on who's calculating it. And but I know that it takes a lot of work to value a company. A lot of people, to get a quick thing, and I get this, they will take the cash flow in the past, they will determine what they think the future is going to be, and they will do a discount rate, and they'll say, oh, if cash flow grows by 3%, it'll be worth this. If it goes by 5%, it'll be like this. But what they don't do is they don't tell you what they believe the business needs to do to grow by 3% or grow by 5%. So there's a lot of work involved in determining the true value of a company. So I outsource that to Morningstar. And so first of all, I think Morningstar does a good job. Secondly, I don't like to do the calculations. So, it's a lot of work. It's a lot of research. So I'm paying for that through the app, and that's what I use. So I believe, based on, I say all that, Fast Eddie, to say this. I trust in Morningstar's fair values. Their fair value for IBM is $139. That doesn't mean at 139 I would get back in, because my average price was down in the 120s. So, it'd probably be something like that. I had originally bought it as an income play. I was buying it because of the dividend and the yield. And now, the business I was comfortable with as well, but it was paying a pretty high yield, and I felt that that it was going to, do well from a business perspective. But it turned out it did a lot better than I thought. So I went from a yield of over 5% to a yield of 3.5% or whatever it is now. So I just thought it was time to sell. Plus, I needed some money to do some other things I want to do, just because it is fun to do other things. I like to stay busy. Oh, SCHD Stan. Yeah, there was some conversation. Your favorite Kevin on YouTube. I'm probably the only Kevin on YouTube, but that's all good. So yeah, I heard you and Russ talking about maybe coming on the broadcast sometime. I'd love that, man. So somehow we'll have to connect, so I can shoot you a link sometime and we can get on together. So that would be awesome. So it's good to have you here, buddy. Let's see. There's a lot of conversation, which is awesome. I love the conversation. So Michael says he still hears generators running around him. We must have been the bottom of the barrel. I think I'll buy the company and fire them all. Yeah. That is one thing that, of course, I was in my career with the larger part of my career was in the utilities, and so one of the things the company would do is find out which circuits their executives were on, and they didn't move mountains to get there, but they did tend to prioritize those a little bit more. At least that's what I heard. All right, let's see. Yeah, so Jim says if it wasn't for AI, I need a drink. It's just water. If it wasn't for AI, I would have been forced to use my real photo in the profile pic or use a picture of Jeff Dunham's Walter puppet. If you guys haven't seen that, that is hilarious. I don't think that's the case, but hey, thank goodness for AI, right? Let's see here. Yeah, John J says Texas has multiple utilities, and they do. Yeah, Michael says he owns a significant portion of one of them, and it's a natural gas utility, privately owned. So fantastic, man. So Michael is into the utility stuff. So if you ever got any questions on utilities, Michael is a good resource. And Russ says he's always available to chat, unless you're at the bowling alley, my friend. But yeah, I think that'd be cool. I need to get several of you guys on, just because it's fun, right? So let's see here. Yeah, so SCHD Stan says that NEE, Next Era Energy, has been very volatile lately, buying opportunities. Hey, let's go take a look at it, because I don't know. I'm going to hide that. I'm not really sure. Let's take a look. This is Seeking Alpha. So NEE, Next Era Energy. So you can look here, and over the 1 year time frame, it's down 2.3%, which is not a terrible thing. But when you go back and look at on a year-to-date basis, it's up 17%. And if you go back to the February-March timeframe when I picked up some shares, we're up even more than 17%. 6 months, it's 17.6. Last month, they have gone down by 2.3%. So they are pretty volatile. I just don't know if now is a good time. I'm holding off. I'd love to add more Next Era to the portfolio, but I also don't really care a lot for the volatility. But we'll see. I'm not adding at this point. Where does it fall on my hierarchy of needs here? Let me flip you back over to that. No, I won't do that. It's this little thing I put together. It's about midway. I'm expecting an annual return of about 14% on them. So that's kind of middle of the road. It's not something that I'm sinking a lot of money into at the moment. So I don't know if that's helpful, Stan, but it is what it is, my friend. I think we'll just kind of hold for now and see what happens. So SCHD Stan, also known as Leroy Skywalker, he said he's been playing fantasy football since 1989. I didn't know they had fantasy football that far back. Might be the longest running league ever. That's true, man. That was before the internet, and I didn't play until I didn't pick up any fantasy football. And I play. We have a little family league that we play every year, so we have that, but nothing serious. And I've been doing that for maybe 3 or 4 years. So, dude, 1989, 11, 31, like 35 years. Dude, you must have started when you were 10. That's funny. All right, let's see here. Yeah, and utilities are interest rate sensitive. I'm buying Duke on dips because of that. So yeah, that's good. Duke's a great company. I've interacted when with their executives when I was in my career, and they're good folks. So Duke's a good company to pick up on. Let's do something real quick. I want to go ahead and get to the questions. The questions for Kevin. That's KW, um, KWESTIONS. Let's see here. I need to present, share screen, and hit this. All right. All right, guys. Here we go. Dividend, the Wealth Circuit Investing Hour. We're going to talk about questions for Kevin. So here's one that comes in from Nkiter. Used to be NK, and I think now it's Nkiter. So, but he asks, which of the utilities is the most correlated to current and expected data centers power consumption? I went online and I called this the data centers in the U.S. Will utilities see a windfall? And I see, I didn't create this map. I just pulled it offline. You can certainly Google that and see. There's some out in San Francisco, Los Angeles, Phoenix, Dallas, big data centers around Virginia, Maryland. D.C. area. Chicago has some. Atlanta, New York City. So there's in the more populated areas, you're going to find it. Is there a windfall though? I'm not investing that way. I mean, you guys can correct me if I'm wrong. Michael, let me know what you think here. I think data centers, in terms of utilities, I think they're going to come in and like a commercial and industrial rate base. Which is going to be a lower rate than the retail customers. So I think it's going to help in volumes, and I think those volumes will help overall rate structure. So until they go through their next rate case, they will actually get a little more money for that. I don't think it's going to be significant though. And because it's not significant to the total volume of the utility, so it's not anything that I focus on. It's not, I'm not going to invest in utilities because they've got data centers. Also, or maybe even getting new data centers. Also, the rate structure causes a short-term impact. So the way the rate structure would work is that, if they brought a brand new data center in, those volumes, the utility would get the benefit of those volumes. But when they filed their next rate case, that would be kind of equalized out, and there wouldn't be that would be factored into the new rates. So I don't think Nkiter, this is just my opinion. You can do whatever you want, but I don't think data centers are going to be a big windfall at all for utilities. So that's kind of where I'm at. Let's see. Let's see what Michael Swami says here. WC is most correlated to data centers. I think those may be the new ones, right, Michael? The new ones that are coming in. Best combination of cost of the centers and cost per kilowatt hour. He says he's working on a cloud provider right now. So that's awesome. So, but yeah, and I think that's true. And I think there's a short-term benefit, but I don't think it's going to be long-term. So I would not determine the utilities to invest in simply because of data centers. I don't think it's going to be a big enough driver. So that's my perspective, and that's what you asked for. So, dude, that's what you got. All right, so let's go to the next question, which is from Honeybee. Honeybee is in the house. I hope you're still on. And so her question, or his question, I'm not sure who it is which sectors should perform best when Jay Powell finally cuts rates? And so the question is, which sectors benefit most from Fed rate cuts? And just in general, I think the sectors that will benefit the most are those who have the largest capital needs. Utilities are a big capital need industry, or sector. So I think utilities are going to benefit from that, and I think we saw some run up in the utilities, and I think it's because of anticipated reduction in interest rates. I also think REITs, because of their investment in real estate, and they have large capital needs as well. So I think they're going to benefit from it. Maybe tangentially, though. How about that for a big word on a Monday night? Tangentially, I think we're going to see some, if interest rates do come down, that's going to provide more liquidity into the market, into the consumer market. And I think we're going to see some sectors that will be improved based on that. It won't be immediate, but it will be a bit delayed. It'll be like the industrial and consumer stocks that are tied to home building, like A.O. Smith, Whirlpool, Stanley Black & Decker. Also, home improvement stocks like Lowe's and Home Depot, I think are going to be maybe a delayed benefit for those guys. And, if they can get the economy figured out and fixed, I think a rising tide raises all boats, right? So I think if the Fed rates are cut, and it creates a better economy, a better economic landscape, I think all of the stocks that perform well will benefit from it. So hopefully that's helpful. That's my opinion. I'm not endorsing any of those stocks because I'm not really sure when the Fed is going to cut rates. Morningstar says there's a 90% chance that would happen in September. That's what the market is pricing in. So, we got that going for us. And it's probably 1/4 to 1/2%, nothing more than that. So, okay. Let's see. Steve C says Pacific Gas and Electric in Northern California would not be my choice. Yeah, I don't have any of that, my friend. So, they've got some challenges with their commission, I think. So, I think I'll stay away from that for the time being. So Michael says he'd form a sub and make it non-regulated. That I'm not sure what that where that's connected, but anyway, sorry about that, Michael. Because of the power needed, this is Jim, for cooling at data centers. A lot of push to put data centers in space. Wow, I didn't know that. So to maybe have Elon Musk fly them into outer space. Is that what you're saying, Jim? That I've not heard that. That's breaking news, man. You are giving us breaking news, which is fantastic. All right, ex-dividend dad. We should put them in Alaska instead. That's true. That's right. Hey, I think I might have skipped over something. Ex-dividend dad earlier wanted to look at TU, which I think is TELUS. So let's just go there. And then we got one that we want to look at called NXST. So we'll do TELUS first, and then we'll do NXST. So let's go to Smart. We'll stop sharing that. I got to find a better way to do this. Of course, here I am complaining about being able to share multiple screens with you guys. It's not a terrible thing to have happen, right? Let's see. We'll go here. Share that. Let's go to Simply Safe Dividends. It would not be a show if I did not go to Simply Safe Dividends. So let's look up TU. TELUS. I think it was formerly a telephone company, but I think they're much more than that now. They're a communications company. Their dividend safety rating is 72. There's some things that I'm challenged about with TELUS, and I'm going to tell you what that is. So It's not the dividend safety rating. It is the payout ratio. Look at the payout ratio, 158%, 150% in the forward payout ratio. So that's not particularly exciting to me. They are also at a 66% debt load, which is pretty high. They do have a 21-year streak of dividends, and they've been growing it by 7%. I mean, that's a great dividend growth chart. I just don't like companies that grow their dividend faster than their earnings grow. I want the dividend to be sourced by the business. I want it to grow. So, there's that. But you can see the dividend's growing nicely. So if I just looked at dividend growth, I would go, man, this looks really good. But, looking at the health of the business, and I think there are others that are looking at this because it shows that their dividend yield is 7.5% almost. So, even Simply Safe says that they're undervalued or maybe undervalued. Their forward PE is still 20.5. So that's pretty rich. But you can see here, I mean, it's been quite a while since they've been below 100% even for their earnings payout ratio. Now their cash flow payout ratio, it's still very high. The cash flow payout ratio is incredibly high. Their earnings per share is dropping. I mean, I just don't see much other than their dividend safety. I don't see much good. Their sales are growing. That's good. Shares outstanding are growing. That means that they're borrowing or they're issuing shares. Return on equity, return on invested capital, all of that is dropping. So, yeah, I don't see much here that gets me excited about TELUS, my friend. So that's those are my thoughts. Hopefully that's what you were after. So SCHD Stan said they use newspaper for stats. And that has to do with fantasy football from 1989. Wow. Newspaper for stats, kind of like what we used newspapers for when we were investing in that time frame, which is we looked at the tickers, in the business section of the paper each day. We did not know what the stocks traded for minute by minute. We just got one price a day. That's all we had. Let's see. Brad says here, in the old days of fantasy football, USA Today published official stats on Tuesday. Wow, I didn't know that. I must have just been out of touch. Maybe it was having 4 kids that did that, but I just must have been out of touch with that because I didn't even know about fantasy football for, quite a while. It's probably been around 10 years ago. Let's see. Michael says WEC is most correlated to data centers, Wisconsin Energy. Yeah, I would agree with that. I think I have gone backwards here. So I need to get back to, actually I don't. What I need to do is keep my promise. I think it was John Jay, to keep my promise to you, my friend. And let's take a look at NXST. And Russ loves NXST, but he does say it is an acquired taste. So let's see if we want to acquire that taste. It has a 60 borderline dividend safety, dividend yield 3.9%. That's not too shabby. What else do we have here? I'm going to take Michael's comment off here. Let me find it first. There we go. All right. So dividend growth, man, they have been growing their dividend like crazy. Look at this. Last 5 years, average 29% per year dividend growth. That is incredible. Now I can see where Russ really likes this stock. So let's see what else we got here. Dividend yields 3.9. It's a bit high. Their PE is only 6.8. That's pretty low. That must mean that there's not a lot of expected growth. Let's see what you can see the earnings per share. Look like the next 12 months are going to pop up, but that might be related to the election cycle. Shares outstanding is going down. That's one thing we like. Return on equity is around 14%. Return on invested capital 7 to 8%, dropped from 13% in 22. Debt to capital is pretty high. It's about 0.75. 75% of their capital structure is debt. And interest coverage ratio is way down. It is well below the 8 that we like to see. It's 1.9, it looks like. So yeah, I'm just not a fan of Nexstar. I would love to love them, but I just can't bring myself to do it. But one more thing we will look at. Let's look at Nexstar and see what Morningstar says about their fair value. That might be, or if they even cover them. Yep, they cover them. So let's see. Well, they say they're right at fair value. They think their fair value is $170, and their price is $174. So I think it's at fair value. There's certainly I don't know of any triggers that would drive Nexstar higher, but and it's certainly not necessarily much on the value side either. They've got an incredible dividend growth, but boy, their debt load's high. So yeah, that one causes me some angst. So it's not for me. But each to his own, said the lady as she kissed the cow. So that's good. Wish I'd thought of that. Let's see what else. So anyway, John J, Nexstar, you got it, my friend. Let's see. I think there was something else. Honeybee says, cool, thanks, Kevin. You absolutely glad to help, my friend. Glad you're on the program, too. It's good to see you. And I use that in air quotes. Good to see you. Let's see. Michael Swami, probably easier to find. Workers in Wisconsin with beer, cheese, and the Packers. Yeah, that could be beer and cheese. Alaska has snow, and it is really hard to get back into the States from Alaska, at least down this way, because we're probably almost as far from Alaska as you can get. So it's a long flight, man. It's a long flight. Oh, I see, Michael. Michael has clarified he'd form a subsidiary as a utility to provide the power to the data centers and make it an unregulated separate business. Yeah, I'm not sure, other than with the power flow, the actual power itself, because it would flow over regulated assets. So I'm not really sure how that would work. But maybe you could get the power to flow that way. So that might be worthwhile. Let's see here. Fast Eddie RX. That is something I have never heard of. So, buddy, I am intrigued. So let's go and take a look. RX. Oh, let me get you guys back so you can see what I'm looking at. Dun, 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 dun. Here it is. There. All right, so we're back here. So RX. Since we're in Morningstar, let's just go ahead and look it up on here. RX. Recursion Pharmaceuticals. How about that? And Morningstar does not cover them. They do have a fair value for them, most likely. They say their fair value is $13.74, but their uncertainty is extreme. I've never seen an extreme uncertainty. Typically, it's medium or high or low. Extreme, I have never seen before. So if you want volatility, you should buy this stock. This would be a highly volatile stock. Let's see what do they even pay a dividend? I didn't look. So let me see if Simply Safe Dividends would have it. No, they don't pay a dividend either. See if they got any numbers in here. Earnings payout ratio they wouldn't have. Yeah, earnings per share, it's negative. Cash flow is negative. Shares outstanding keep rising because they got to raise some funds somehow. The return on invested capital is extremely negative. Yeah, so interest covenant. Yeah, dude, I don't know, Fast Eddie. If you buy this, let me know because I want to hear how that goes. I would not touch this with a 10-foot pole, as we used to say when I was growing up. So there you go, buddy. Yeah, RXRX is a no-go for the wealth circuit portfolio. Okay. Let's see. We got about 5 minutes left. What do we want to do in the next 5 minutes? Michael says, or perhaps a sub to provide the gas on a non-regulated basis in the cloud. Yeah, that would work too. Yeah, I was just thinking on the electric side, not on the gas side. You're right. Let's see. Okay, SCHG Stan, thoughts on Target? I don't follow Target, but let me take a look at it. Morningstar says the value is 136. They're trading for about 150 right now. So yeah, I don't know. Let me see. Let me see what Simply Safe Dividend says about it. I know. Just FYI, Morningstar's call today or their live stream today. They talked about Costco, not Target, but Costco, and they said it was one of the stocks to sell. So you got that going for you. TGT, Target. All right, so we've got about an 80 dividend safety, about a 3% yield. I'm sorry, guys. I'm just having to kind of refresh my memory on Target because I don't follow them. Payout ratio is not bad, 49%. Dividend growth, well, they only grew their dividend by 1.8% last year, so there's that. Man, but look at the growth before that. So their 12-year or their 5-year growth is 12%. And they've been growing it for 52 years, so that's good to see. See what their financials look like. Earnings payout ratio looks fine. So I think their shares, they've been buying back shares. Their sales are going up. The return on invested capital is fine at 16%. If I think of cost of capital around 6, 7, maybe 8%, then 16% is good. It's double their cost of capital. Net debt to capital, their debt loads are fine. Their interest coverage ratio is fine. Yeah, I mean, I think, Stan, it would come down to, for me anyway, it would come down to what do I believe the retail business is going to do. And, we're going to have hopefully have some lower interest rates. So maybe that will help stem the inflation. But I tell you what, there is this inflation that we've had. A lot of people think, oh, inflation's back down, so everything's back to normal. It is not back to normal. Inflation that we have seen over the past couple of years is still in the prices we're paying today. And that is a problem when it comes to the consumer. And I think we're seeing companies like McDonald's and Burger King and Wendy's, I think they're all struggling. And therefore, my favorite company, Lamb Weston, which provides the French fries for those guys, I think we're seeing all of them struggle because inflation is hurting the value meals. The value meals now are more expensive than they've been in the past. And so, we got that going for us. So I'm not sure about Target. It's not a company that I get excited about. I think it's somewhere around fair value. So if somebody wanted to buy into it, the financials look fine. I don't follow the management team, so I'm not really sure how well they perform. But I would kind of want to figure out what they have going on. So anyway, those are my thoughts on that, Mr. Skywalker. Jim says he remembers the business major in college had piles and piles of Wall Street journals for their classes. Absolutely. I remember that too, Jim. So, Jim, if you don't mind sharing, when did you graduate from college? And I want to see if we are similar in age. So I graduated in 87 from college. So Nexstar, so SEHD stand, Nexstar started going up right after I started buying. That is fantastic, man. You know what my mom used to say is I'd rather be lucky than good. So take it, my friend, cash it out, go to the bank with it, and that's fantastic. Russ says Nexstar has several growth opportunities that I hope to pan out. Obviously, won't be reflected in current numbers, so a bit of an educated business is. Yeah, that's absolutely true. If there's something coming in the future that we don't have in the past, that's it's hard to build. It's hard to predict the future if the future is going to be different than the past. So if they've got some cool things going, then absolutely, I think that's right on, my friend. All right, let's see. Oh, wow. Hey, Russ is he says he's out. He's got tornado sirens popping off. You stay safe, my friend. Get somewhere safe, and I'm glad you joined. I really appreciate you being on the show, buddy. So, Fast Daddy says one of the ETFs had it in their list of holdings. So, yeah, it scares me, buddy. I don't know. I would probably stay away from that ETF. All right. So yeah, Burn Survivor says let's smash that like button. So John, maybe we can hit Schlumberger on the next program. I appreciate you guys joining. We are over an hour now, so it is time for me to go. We got some new furniture today, and I am really excited to sit in my new recliner and watch some television. So with that, guys, I really appreciate you being here. If you're not a part of the Discord, join the Discord. I'd love to see you there. It's a great way for us to stay connected. And I'm going to be putting some videos together, but it is an extremely busy time right now as I'm beginning to make some other investments. So I will get to that soon. And I want to talk about this whole idea of pimp my retirement. I want to talk about passive income from my portfolio. That is pimp, PIMP. So I want to pimp my retirement. I want to share more about that and how I use numbers to determine when I'm going to buy and sell stocks. So anyway, with that, I'm going to get off of here, and I will see you guys on the next one.